So this is the daily time frame, and you can see that we have just recently broken close below this previous low at 5801 or 5800, and you can see that as the market broke and closed below that, we put in that nice strong break and close below, and we're starting to push back up to previous support, which should become resistance. That's what history teaches us about the markets. Patterns repeat themselves. Look, success leaves clues. Look left, market leaves clues, structure leaves clues. But if you just project this out a little bit further, in fact, let's put our horizontal line at this level as well. What you can see is this level is respected time and time again. And the more you zoom out, you can see significance of this level. So you can see this massive rejection here, big rejection here. We tested here, it became support. We had a rejection there, and then we blasted through. Whenever you see breaks and close above or below these major structure levels, they're always following big momentum candles, because it's to ensure that we break and close below those significant levels in the market. But what the clue is it tells us that these are respected levels. So if we break and close below, the chances are if we push back up to that level, there's going to be some protection there, right? Bears aren't going to want the bulls to push beyond that level again. So what we can do is we can start narrowing down our entry zones. So I'm going to drop down to the 4 hour now, and you can see that we've had this, what we call a complex pullback. Then we had a little, a mini outside return within the pullback, and if we clone this move here, you get what is known as an equal measured move, an ABCD pattern. And that is one way that traders get involved. So our job as a trader, as a high probability trader, is to think like as many other traders as possible, right? So what I like to do is to think like as many traders as possible by bringing on as much confluence as I can that's going to give me the best case for entry. That 886 completion is sitting just up here at 58.28, which would be a bat formation completion. So anyone who's trading bat patterns just sets a set and forget order there, you know, basically a limit order, a sell limit order, and they're ready to get in and sell this short there, right? Because as we're doing this, what we're doing is we're narrowing down. If we bring on our rectangle here, we're kind of narrowing down this tight little kill zone for the highest probability of a reaction to the downside, as a move to the downside. Another popular strategy for shorting the market in a directional move like this is what we call a fib inversion setup, or a Fibonacci inversion setup, where we're going from the mini outside return to the previous high and back down, and you're looking at that 1618, right? So you can see we're at that 1618 now.